and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you've joined us for the Clean Energy and Renewables Conference. The next presentation of the day is from Cielo. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I am very pleased to welcome Ryan Jackson, Chief Executive Officer of Cielo, which trades on the OTCQB venture market under the symbol CWSFF and on TSXV under the symbol CMC. Welcome, Ryan.
Thanks, Lily. Pleasure to be here. And good morning or afternoon, everyone. And thank you for joining today's Clean Energy Investor Conference. As Lily mentioned, I'm Ryan Jackson, the CEO of Cielo Waste Solutions. Cielo trades on the TSX Venture as CMC and on the OTCQB as CWSFF, as Lily mentioned as well. I want to start by giving you a sense of where we are as a company and why I think this is exactly the right time to be telling this story. We spent the last couple of years doing the hard work, resolving legacy issues, rebuilding our strategy from the ground up, and positioning the company around what we believe is one of the most compelling infrastructure opportunities in the clean energy sector. That initial opportunity is sustainable aviation fuel, or SAF or SAF. And our vehicle for it is Project Nexus in Prince George, British Columbia. For the next 20 minutes or so, I'll walk you through the sustainable aviation or SAF market, our technology approach, our project structure, our revenue model, how we make money, and the milestone roadmap ahead. By the end, I want you to have a clear picture of what Cielo is building and why our initial project is in Prince George, BC, and why we believe the risk reward at this stage is compelling. So let's get into it. Before we go into the details, here's the big picture. 4 things define Cielo right now. First, with our initial project, we've targeted SAF, a 25 billion plus market by 2030. That's not a niche market. Aviation is one of the hardest sectors to decarbonize. SAF is the only viable near-term solution, and supply is dramatically short of where it needs to be. Second, as I mentioned, we've completed a corporate restructuring. Legacy issues are behind us, and we're fully focused on execution. This is an important point because the Cielo you're looking at today is fundamentally different from the company of 3 or more years ago. A clean balance sheet, a focused strategy, and a very well-aligned and credentialed team. Third, and we have a binding LOI to acquire the Canadian Discovery Limited, or CDL, asset package, closing this month. That acquisition delivers the Nexus Platform IP to Cielo, which gives us the proprietary tools, data sets, and models to power our project development engine. It's a significant competitive advantage and one of the things that differentiates Cielo in the market. Fourth, Project Nexus in Prince George, BC. We're advancing through pre-FEED currently with indicators that suggest this is a project that will provide a strong rate of return. Pre-FEED is the engineering and technical validation stage, and it's where you confirm that the numbers work before you commit full engineering capital. 2 additional points worth highlighting is that Cielo's technological platform approaches targets with a negative carbon intensity score. This puts us in the premium tier of the credit market, and we're positioned in a segment growing at 65% annually with binding regulatory support across multiple jurisdictions. The combination of those factors is what makes this a compelling moment to pay attention to Cielo. Let me give you the full market context because I think it's important on just how significant this opportunity is. Aviation represents 2 to 3% of global CO2 emissions. That sounds modest until you consider that aviation emissions are among the most difficult to address. Electric planes, the batteries required to power a commercial aircraft weigh more than the plane itself. Hydrogen, storing enough of it safely on a commercial flight is an engineering problem no one has solved. Frankly, most passengers aren't lining up to fly in a pressurized tube next to a hydrogen tank. SAF is the only solution that works with existing aircraft and existing airport infrastructure. No new planes, no new fueling systems, just cleaner fuel. That's why the entire aviation industry has converged on SAF as the primary decarbonization pathway toward net zero. The problem is that the supply gap is enormous. Today, only 0.1% of jet fuel is actually SAF. And the market is mandating volumes that require that number to grow dramatically, 12 times the current volume between now and 2030, according to just industry projections. The dominant production method, HEFA, which uses vegetable oils and animal fats as feedstock, is already constrained. The feedstock is finite, prices of that feedstock are rising, and the pathway simply cannot scale to meet the volumes airlines need. That supply ceiling is what creates the opening for gasification-based production from abundant waste streams. So if you have a $25.6 billion market by 2030, growing at 65% annually, with North America holding 42% of that market, the regulatory frameworks are already in place. The EU mandates 2% of SAF by 2025. British Columbia mandates 1 to 3% between 2028 and 2030. And the US Inflation Reduction Act, or IRA, provides up to $1.75 per gallon in production credits. These aren't proposals, they are law. Airlines are signing long-term SAF offtake agreements right now because their boards are holding them to net zero commitments. They need supply. The feedstock-constrained HEFA pathway can't deliver it at scale. That gap is exactly where Project Nexus and Cielo is designing to serve. Now let me explain how we actually make this work, because I think understanding our technology approach is key to understanding our competitive position. Cielo is not a technology company. We are a project developer. That distinction matters. We don't invent technology, we evaluate commercially proven technologies and select the best fit for a given project based on location, feedstock, economics, and regulatory environment. We're technology independent, which means we've never locked in or won't lock into a single process or provider. That independence allows us to always optimize for the best risk-adjusted outcome. The production pathway for Project Nexus starts with waste feedstock. In Prince George, our primary feedstock is woody biomass forestry residue and sawmill byproducts that are in abundant supply in that region and currently represent a disposal cost for the forestry industry. We're also incorporating creosote-coated railway ties, which are significant environmental liability for Canada's rail network. Rail companies have millions of these ties in legacy piles, along with annual maintenance that need to be decommissioned and disposed of responsibly. We convert that liability into feedstock. This is a meaningful feedstock security advantage. From there, the feedstock goes through gasification. That is a well-established industrial process that converts organic material into syngas. The syngas is then processed through synthesis to produce liquid hydrocarbons, which are refined into SAF and potentially other clean fuels. What sets Project Nexus and the Nexus platform apart is the carbon capture integration. Most SAF projects are designed to reduce carbon intensity relative to fossil jet fuel. As a result of the CDL acquisition, we're designing for a negative carbon intensity by embedding carbon capture and storage, known as CCS, at the design stage. This is a result of exhaustive research and due diligence work that Cielo did prior to our acquisition of the CDL assets. This is a core component of the Nexus platform architecture. The CCS design decision is what unlocks the premium tier of the credit stack, which I'll get to in a moment. The Nexus platform ties all of this together. It's the disciplined, repeatable framework that ensures every technology decision is made on commercial fundamentals, not engineering preference or vendor relationship bias. So the Nexus platform is Cielo's core intellectual property, and the reason why we are confident that we can develop projects efficiently, repeatably, and profitably. Let me walk you through what is actually going on as a result of our 4 integrated pillars working together as a single development engine. The first pillar is technical evaluation. We have non-public data sets, proprietary models, and analytical tools specifically built for project development. This is the result of years of work in this space, and it's not something you can replicate just by hiring consultants. It allows us to evaluate competing technologies against real project parameters. identify risks early, and make informed technological decisions based on real-world working engineering models. And also, it allows us to avoid spending significant engineering capital. The second pillar is economic modeling. We have commercial frameworks and financial models that access project viability at an early stage, before capital is committed. We stress test these projects against a range of fuel price scenarios, credit price assumptions, feedstock costs, and capital costs. If a project doesn't pass a relentless internal and economic threshold, we don't advance it regardless of how technically interesting it might be. The third pillar is regulatory intelligence. The clean fuels regulatory landscape, LCFS, CFR, IRA, all of the provincial and federal grants is complex, and it's evolving and is jurisdiction specific. We have a deep expertise in this landscape built directly into our project development workflow. That means we're not discovering regulatory opportunities or constraints after the fact. We're building them into the project design from day one. The fourth pillar is a scalable project pipeline. The platform is designed to systematically advance multiple projects using the same discipline framework. The work we're doing on Project Nexus have all of the data sets, the models, the regulatory relationships, the engineering learnings, all continuing to be synthesized as part of Cielo's platform. And all of that carries forward to the next project. Prince George is the first application of Nexus Platform. The platform itself is part of the investment thesis for Cielo's long-term value because it means we're not a single asset story. Here's where the financial picture gets compelling. And I want to spend a bit of time here because the revenue architecture of Project Nexus is genuinely differentiated. There are 4 potential layers of revenue, with 3 of them certain, and they stack on top of each other. The foundation is SAF or SAF fuel sales. Today's airlines are paying a significant premium over conventional jet fuel pricing because they need to demonstrate progress against their net zero commitments to their shareholders, to the regulators, and quite frankly, to their customers. And we intend to capture that premium for as long as the market will bear it. What makes our economics particularly resilient is that we don't need that premium to make this project work. Between BC LCFS credits and the federal CFR credits generated by our negative carbon intensity profile, we can sell fuel at the rack pricing, which is a standard commodity jet fuel pricing, and make this still very highly profitable. The premium is complete upside. It's gravy. The credits are the foundation. That's a level of economic resilience you won't see in most SAF projects. Second layer is BC LCFS credits. British Columbia's low carbon fuel standard rewards fuel producers for every unit of carbon intensity reduction below the benchmark. Here's what matters for us. Specifically, we're integrating carbon capture. Our carbon intensity is likely to go negative. When your CI is negative, you're not just earning credits for the carbon you avoid, but you're also earning credits for the carbon that you sequestered. That's a structurally superior credit position compared to any other conventional SAF project, and it translates directly into our project economics. The third layer is federal CFR credits. Canada's clean fuel regulations create a second separate credit market. The same fuel unit that generates the LCFS credits also generate federal CFR credits. 2 credit streams from 1 fuel unit. That's a meaningful revenue multiplier. The fourth layer is a potential US IRA incentive for up to $1.75 per US gallon. That qualifies under, it's called the Inflation Reduction Act. We treat this as optional upside rather than base case. Our project economics are designed to work on Canadian fundamentals alone. However, the IRA exposure is optionality, not dependency. So Project Nexus is designed to make money 3 different ways simultaneously: fuel sales, BC LCFS credits, and federal CFR credits. Most SAF projects can't say that. And if cross-border export markets open up the way we think they might, the US IRA incentive could add a 4th. So how does Cielo make money? It's important to distinguish between how the project makes money and how Cielo as a public company makes money because they're related but distinct. The foundation of our corporate revenue model is the Nexus Platform proprietary IP that Cielo recently acquired from CDL, and that underpins every project we develop. That acquisition is what transforms Cielo from a single project developer into a scalable platform company. At the corporate level, Cielo will generate value through three mechanisms. The first is platform license revenue. Every project that deploys the Nexus platform pays a license fee to the Cielo corporate. As we advance additional projects beyond Prince George, this becomes a recurring compounding revenue stream at the corporate level, independent of any single project's performance. The platform gets more valuable with every single project that comes online. The second is retained project economics. Cielo retains a meaningful economic interest in each project without deploying capital proportionate to that ownership. In practical terms, what this means is that we participate in project economics, fuel revenue, carbon credit revenue, and cash distributions without funding its full ownership percentage in cash. That's the capital efficiency working directly in Cielo corporate shareholders' favor. Third, and this is specific to Project Nexus in BC currently, is access to non-dilutive capital. The federal and provincial clean energy funding landscape in Canada is substantial, and Project Nexus is well positioned to access programs like the Clean Fuels Fund and federal investment tax credits. That's what makes, for Cielo specifically, grant capital flowing into the project can support Cielo's direct ownership, not just the carried interest. With that and the compound economic interest or carried interest beyond retained equity alone, value creation without proportional dilution from the public company, which is very important. Taken together, it's a capital efficient, scalable model. As the project pipeline grows, platform license fees compound, routine project economics appreciate, and grant supported ownership builds. Each new project adds to corporate value without requiring Cielo to fund it dollar for dollar through dilution. For Cielo shareholders, all that means is that value creation is happening at multiple levels simultaneously, and as the platform scales, the corporate entity becomes increasingly valuable independent of any single project outcome. That is the kind of business that Cielo is building. So let me give you a quick snapshot of the corporate picture. Cielo is listed on the Venture Exchange, as I mentioned, under the ticker CMC, and on the OTCQB under CWSFF. We are headquartered in Calgary, Alberta, and our project development activity is currently centered in Prince George, BC, with more projects in our pipeline as we speak. We are pre-revenue, and I want to address that directly because I know it's a question investors have. Pre-revenue in this context does not mean pre-progress. It means we're doing the disciplined work that requires responsible infrastructures to do before committing construction capital. Pre-FEED engineering, life cycle assessment, LCFS applications, feedstock agreements, financing architecture, all of that work is underway and advancing on schedule. The value inflection points come as each of those milestones that we internally refer to as stage gates is validated and announced. Our strategy is what we call asset anchored. It's efficient clean fuels development. Asset anchored means that we're building real infrastructure with real feedstock supply and real offtake potential, not a paper project that is underpinned with unproven technology. Efficient means we're doing it with the capital discipline that the Nexus platform enables, without overcapitalizing the development stage. Once again, I'm Ryan Jackson and I'm Cielo's CEO. I have over 35 years of business experience, and I've spent the last several years rebuilding specifically this company to execute on this opportunity. I've seen firsthand what happens when companies overpromise and underdeliver. Our approach is the opposite. We advance methodically, we validate relentlessly before we commit, and we communicate transparently exactly where we are in the process. Our team is lean, nimble, and experienced. We don't have excess overhead. Every dollar development capital that goes directly into advancing Project Nexus and others towards FID. So why now? This is the question every investor asks, and I want to give you a direct answer. The reason to pay attention to Cielo right now is that we're at the beginning of a sequential milestone progression, and each milestone in that sequence is a de-risking event that should be reflected in the company's value. Investors who participate ahead of those milestones capture the value created in each one. Let me walk you through a timeline. In the near term, and much of this is already done, we've closed a $1 million private placement that funds near-term development activity. We'll be closing the CDL acquisition, which delivers critical foundational elements of the Nexus Platform IP to Cielo, and it will formally establish our development infrastructure. In the midterm, through the second half of 26, the focus shifts to completing the life cycle assessment, the technical foundation which supports the LCFS credit confirmation. We'll be advancing government applications, completing negotiations with the BC government on those parameters, and working toward FEED authorization or front-end engineering and design decision. That FEED authorization decision is a significant milestone and is at the point where the company formally commits to full front-end engineering and design, and it represents a major validation of project viability. Longer term, as we work towards final investment decision, it will be at the point where construction capital will be committed and project transitions from development to build. Following FID, FEED completion leads to first revenues and LCFS credit monetization. And in parallel, we're already evaluating additional project candidates so that the platform doesn't skip a beat as Prince George advances. Each phase builds on validated progress from the prior one. These are structured sequential decision points, not a straight line. It's a disciplined progression. So let me close with the core thesis stated as plain as I can possibly state. The SAF market is real. It's large and it's structurally undersupplied. The regulatory frameworks that create demand are already bringing in multiple jurisdictions. Airlines have made net zero commitments that are no longer voluntary. They're a license to fly. The feedstock constrained HEFA pathway cannot deliver SAF at the volumes required. Gasification-based production from abundant waste streams is where the next generation of SAF supply has to come from. Cielo is purpose-built to develop that supply. We've completed the restructuring that was necessary to get this company focused. We've built the Nexus Platform, a proprietary, repeatable project development framework that gives us the capital-efficient way to advance clean fuels projects. We've secured the right location in Prince George with access to abundant and cost-efficient feedstock, and we've designed the project around negative carbon intensity from the ground up. And we've structured the financing architecture to access the grant programs, credit frameworks that makes this large-scale clean energy infrastructure buildable across the country. I'm not here to tell you the outcome is guaranteed, but I am here to show you that the framework is sound, structure is bankable, and the market is there, and we're executing. If you'd like to connect, I'd genuinely hope you will. You can reach me directly at rjackson@cielows.com or call my direct line at 403-256-7440. And I will then move to questions. How much capital is required to get to market in the ballpark time frame for first revenue? That's the first question. And it's a good question. The capital required is going to be, we're going to be announcing that through stage gates. The next milestone is going to be going from pre-feed to feed. And we expect that that will be happening, as I mentioned in the presentation, later this year. And as it relates to time to revenue, those are all things that we'll be progressing and announcing as we get through the stage gates for the project. Next question. What are one or two catalysts over the next 12 months that you believe the market is still materially underestimating? That's a great question. So when you look at the overall value of what we've acquired in feedstock, what we've acquired in the way of location, and everything else, I mean, obviously, I'm the CEO. I'm going to always want to suggest that my stock is undervalued, but this is an incredible entry point, and I myself have entered into and invested a significant amount of my own capital in this because of that very fact. So the catalyst over the next pre-feed, we're working through that right now. We're going to have everything validated, and we're going to then that next significant milestone, which will be feed. That is a big catalyst, is going to the feed funding and the feed work, which will then take us into the new year. Great question. With the recent financing now closed, how has your investor base evolved, and how do you see this as a validation step that makes it easier to attract? That's another good question. Institutional capital step makes it easier to attract larger institution capital for the next phase of growth. So with this last financing and with the CDL acquisition, the investment that was made by both insiders, including yours truly, as well as CDL principals, would suggest that exactly that's the validation step. CDL is our owner's engineer and has been for the better part of the last number of months. And so the very progression of that over now and into the future is an incredible validation step. And the fact that it hasn't been recognized as such in the market only just shows the upside and the compounding nature of how much the share price can move. Given the LOI concurrent financing with CDL principals, do you see this as a template you could replicate with other technical or strategic partners to accelerate additional Nexus projects without shouldering all the early stage risk and capital? Couldn't have said it better myself. That's exactly what we plan to do. The fact that we're able to leverage and replicate and find additional strategic partners as a result of the efficiency of capital is exactly why this makes sense. How are we doing for time? We've got 3 minutes left here. I'm not going to get to every one of these questions, so I invite you to send them to me at rjackson@CLOWS if I don't read your question. Here's one. BC's low carbon fuels regulation now directly targets jet fuel CI, and the province's initiative agreements program is focused on SAF. How does that regulatory alignment translate into premium pricing or priority support for Project Nexus? That is a question that I didn't add into the LCFS initiative agreement, so thanks for that. That allows for up to 50% or close to that in CapEx funding alone through credit minting and the initiative agreements. That is something that we're pursuing vigorously and something we expect to be rewarded with. There's more news to come on that, and we'll be working through that. We've disclosed that publicly. We've said that we'll be using we'll be targeting the initiative agreements. The open call for SAF alone allows us to point to that with confidence. Now that you've cleaned up legacy issues and brought in new partners, what part of the story do you think investors are still missing on the upside? You know what? I actually don't think anyone, it's us telling the story now. We've been so busy talking about how we've been cleaning up. Quite frankly, this is the first time we've been able to evangelize or speak to the business plan. So that's exactly my job going forward, is to go out and tell the story, because up until now, we've been positioning everything, the project, the company, everything for success. Now we can finally get to speak to it. So good question, and thanks for that. I've got 1 minute left. One more. Okay, this one's good. If you can execute as planned over the next 12 to 18 months, and we will, what's the main thing you think the market will be surprised by in a positive way? Let's end on this. They're going to be surprised at the fact that we're not going to have to dilute ourselves to death to do it, right? We're going to protect the cap table with as much relentless, with the relentless pursuit of not diluting to the point where we're managing our cap table very efficiently, and that all of this is going to just allow us to compound the company's value without ridiculous dilution. So that is what I think the market will be surprised at the most, is that we're not going to be going back to the well as often as we are. And with that, I believe I'm out of time.